I'm Sandman. In this channel, I'd like to introduce Japan's economy and general topics. Today, I'll explain Japan's long-suffering stock market is back. This bar may have staying power. Japan's stock market has waited more than 3 decades for its moment in the sun. The country's major stock indexes are trading at high not seen since 1990, when its infamous asset bubble of the late 1980s was just deflating. So far this year, the benchmark Topix has jumped almost 14% and Nikkei 225 and 225, which tracks Japan blue chip companies, has ripped nearly 17%. The indexes has outpaced the United States S&P 500 and Europe stock 600 benchmark indexes, which has both risen 8% in that time. In my 33 years in the market, things seems probably more positive now than they seem at any time in the whole period, said Jeffrey Hanson, an investor management at GLG, a subsidiary of hedge fund giant Man Group. It's not based on hype. Investors says Japan stock have benefit from relatively cheap valuation, a long-awaited return of the inflation and weakening currency. An endorsement by Warren Buffett probably did not hurt either. The legendary investor told Japan's publication Nikkei in April that his flagship investment firms, Berkshire Hathaway, planned to increase its hold in 5 Japanese companies. Foreign investors bought 15.6 billion worth of the Japanese stock last month, the highest month amount since October 2017, according to the Japan's exchange group. All years, investors have hoped modest rise in the Japanese stock would translate into sustained market revival for the world's third largest economy, which is also home to large household name electric companies and car makers like Sony and Toyota, but is never die. But this time, investors tell CNN really different. Change from the top. Japan stock receives the biggest bump from the overhaul of corporate governance rules that has compelled companies exclusive to improve the shareholder returns. JP Morgan analyst says last week that structural change, talking to in route in Japan could keep the current market rally stay forward. Earlier this year, the Tokyo Stock Exchange began telling companies to pay more attention to their stock price. It urged them to come up with a plan to boost the price to book ratio. This is from the share price relative to its net asset. Half of companies listed on Tokyo Stock Exchange trade at PTB ratio of less than 1. According to the Man Group data from February, compared with 3% from on the S&P 500. A ratio means that stock is bargaining. The problem is that at least half of Japan's companies have been stuck trading at a ratio of below 1 for most of the past 20 years. As a result, there have been little incentive for investment to buy the stock if they don't believe they can sell them at higher price later on. There are long been a lot of value companies in Japan. Also note, Token is current in the US and Europe corporate management is trying to maximize their share price, but they know by no means been a case in Japan for the last 30 odd years. That may be changing. Companies tackled by the Nikkei index paid record dividend in 2022. At the same time, the but of share buyback has helped well stock prices. Japan's firms bought back 9.7 trillion Japanese yen, 7 billion US dollar worth of the one stock in the fiscal year ending March 2022, according to Frank Benedict, head of Japan equity strategy at Societe Generale, that almost since that he started stacking at the data 24 years ago. For the 2023 fiscal year, share buybacks by totaled around 9.6 trillion Japanese yen, 6.2 billion US dollar. That number could rise because a few companies are still to report their earnings. That's it for today. Thank you for watching. Please subscribe to my channel, and if you like it, please thumbs up.